Hello, everybody, and welcome to our market update for the 4th of February 2026. It's great to see a lot of you on the market chat today, and I love those spirited discussions that we have. Uh, I feel like I always am smarter after listening to the group discuss those things. So thank you for doing that. Please continue to do that. We love your participation. All opinions are welcome. As we look to see where we were, boy, did the picture change a lot as we started going through the day. Let me go to a 5-minute chart on the NASDAQ, and I want to show you where we were when we started the market chat, which was right around here at 6:11 or so. And during the market chat, we had a bit of a sell-off. I don't know, maybe it was something we said. But by the time we finished the chat around 11:30 or so, we were down to 606 and change. There was a bit of recovery, which I like. This is, of course, the ATR that I use. This is calculated on a daily basis automatically. I'm not doing this, but this is new. This is going to be part of Velocity 2.0 that I'm working on right now. This is an options sort of dashboard that I'm looking at because when I'm looking at velocity, yes, when you look at a trade that looks like this, where you get in back in here in May and you're waiting to get out below the ribbon for that hard exit at 583, your entry was around 496 or so. So yes, it turns into a great trade, but for the most part, I am not trading this with shares. And while a trend like this is not uncommon on ETFs, the way I'm trading it is with options, and I'm looking to take profits along the way. So I wanted to get a little bit of a historical perspective on what each of these entries is suggesting to me. Again, it's historical, but that is going to help me maybe 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 be a little bit more precise with my forecast for what's upcoming. So you can see over the last 5 years, we've had 6 long signals, 5 short signals. The average max move, so that's the average max move of those 6 signals was about 18.5%. And the average max move of those short signals was about 12.5%. And this is not going to come as any surprise to you that the number of days that it takes for the long position to peak is a lot higher than the number of days that it takes for a short position to peak. That old adage of taking the stair steps up, but the escalator or I'm sorry, the elevator down, which is not uncommon. And just in the last 2 days, you can kind of see what's happening. So if I was just sitting on in these trades, I know that over the last 5 years, one of those trades has gone up at least $173 on a stock that's 605 on a short. We've had a max gain of 84.82. So if I'm playing this with options, I know that I'm looking at probably a 90-day to expiry when I'm long on this as a minimum, and a 30 to maybe 60-day expiry if I'm short on this one. So that is how I'm using the table. If the table does take up a little bit of real estate on the chart, and you can see I've taken out the watch list just to make room for it. There is an option to hide it. There is also an option to reduce or increase the time frame. So right now it's in years, so you can go 1 to 40 years or as far back as stock will take you. You can see all of the signals in that time. And as I go through the charts today, you'll see these numbers changing, and I think you'll be pleasantly surprised by the green numbers that predominantly show up on this table here. So going back to the NASDAQ, this closed below the ATR. It's a bit concerning for me. We talked a lot about the sell-off in software yesterday, names like Thomson Reuters and SAP. Adobe is one, Expedia another one. So there was kind of a widespread sell-off in the software space, and I think we may be starting to see cracks in the AI armor here. The news from Anthropic, of course, is that they're finding new and better and more efficient ways to help you do things or help company do things that they would otherwise have been paying a lot of money to have someone else do for them. So I want to see how this story plays out. There's nothing for me to like here, long or short. I think we're in a bit of a channel. There's the all-time high previous. We did get up there and got rejected uh, very, very handily at that level here on the 28th of January. We're now right at 605, so we'll call it 600 or so. So for me, there's really not a whole lot to do here. I want to watch and wait, and I want to see if we have follow through from here, if we start to test the bottom of the ribbon. If we do and we get a short signal, I'm going to get a little bit more interested in a short on the NASDAQ. If, of course, we turn around and we start moving up, and we break the all-time highs, then I might get interested in more long positions. We look at SPY, which looked better than the Qs on Sunday when I did the video. SPY still looks better, still above the ATR. On the Qs, the ATR has turned negative. The trend has turned bearish, and this one, the trend is still bullish, but I don't expect that to hold on for long. We continue going the way we're going. I think we're going to have a close below here by the end of the week. So I'm watching this level here at 676, call it 675. We'll just make that number even at 675 to see if we can hold that level at 675 or if we can break above these levels at 698, and let's round that up to 700. So nothing for me to do here as well. Looking at the Russell, this one has been a bit of a tough slog. We go up, we go sideways, we go up, we go sideways. And here, there's that ATR holding on barely. Now, I like the pattern where we test the ATR, close above. Now, there isn't a whole lot of conviction here. I'm looking at the volume and I'm looking at the cumulative volume delta. None of this is very impressive to me in terms of buyers coming in with conviction. This just seems like typical market action here. So, order of the day for me on the Russell is watchful waiting. From there, let's head over to gold futures. And this is on a daily chart. And you can see on gold futures, last 5 years, biggest move here on a futures contract that's $4,950. Our biggest move was $3,692. So out of that 4,950. And I think that's the move we're currently in, where we have captured what is it, about three-quarters of that entire price on that futures contract here. The shorts not doing well, but again, we're making money on average on these shorts. 13 entries here to the long side, 13 entries to the short side, 5-year look back. And I also put this in here because again, we're trading this with options, and I need to know, or I would like to have an idea of how far out I would like to go with my expiries. And you can see this is, and this is also, I don't know if this is, there's an option in the version that we'll send out to you, but I'm dabbling on whether I want this number to be 5 bars or this number to be 3%. So this was just a number that I thought would be reasonable. So this is any move of more than 2%, long or short, in less than or equal to 5 bars. So if that's happening more often, then when I get an entry, I'm looking at maybe shorter term expiries to take advantage of that gamma and delta expansion. So gold, as I'd mentioned, and let's go back to Friday where I noticed something that was interesting. That when we had this sell-off here on XGD, which is the miners, so this was a pretty significant sell-off, about 12%. What I noticed here was that it seemed like the sellers weren't really overpowering the buyers. The buyers seemed to be picking up some of the contracts or some of the shares that the sellers were offloading. And I'd mentioned this on that Friday during the market chat that I think we're due for a bit of a bounce. And from here, it looks like we certainly have bounced. It looks like about 5.5% or so. And I'm very happy with that move. We're still not above that ATR level. In fact, we're right there. So this is going to be an important test here at 58.65. My positions here, this risk reversal, I did want to mention, I did move this 65 out to a 75. I will give you the full details on the Friday session because this was actually getting pretty close to, in fact, it actually did get over 65. So there was not that there was a great risk of me being called out on those shares, considering that this is a September expiry. But I did extend it out. In hindsight, I should have just left it alone, but this is this is part of the game. So rolled out those options. I think it was either a 70 or 75. I'll check the account and get back to you on that. So the risk reversal was buying a $40 put. As you know, my cost on this is about 25. So I was happy with a guaranteed $15 gain, but wanted to let it run to the upside and collecting premium along the way. So that was the strategy here that was put in place on the 17th or around the 17th of October. So for me, no changes here. I'm still continuing to hold on to XGD. SLV, getting stuck here at that bearish ATR. I want to see it close above if we can, $80.30 after hours, up about $1 from where we closed the day. And SLV, Peter had mentioned this, and we had talked about this, the idea of buying SLV or COMEX futures versus buying actual physical silver. So my preference generally is PSLV, which tracks or which is really a claim against physical silver, the way it's structured, more so than SLV is, and that you can redeem your shares. There are certain, of course, there are restrictions meaning you have to request a certain number of ounces of silver. So yes, will people be redeeming? It's unlikely, but anything can happen in this market, and I would like to have a claim against physical silver than a claim against a futures contract or a claim against uh, some other structured product in silver. So that's why I do like PSLV. However, PSLV options, which are only listed on the Canadian Derivatives Exchange, they do exist. They're just not very liquid. Do I want to pay the poor bid-ask spreads, or do I want to expose myself to the poor bid-ask spread to give myself a little bit of protection? The answer is not an outright no. I would actually consider that. And if I if I do look at it, I'm going to be looking at something that's either September or December to either put on a protective put or to put on another call or a risk reversal as we did with XGD. So that's what I'm looking at. I do like PSLV a little bit better than SLV right here. On the gold side, there is the Sprott physical gold. A physical gold, from my reading in the current situation, doesn't seem to be as much of an issue as physical silver is. So in this case, GLD is probably fine. I don't have GLD, I have XGD, and I'm thinking about adding some PHYS or GLD. GLD, the only thing that's keeping me away from it is the cost of the actual units in the ETF, which are getting close to, they were actually pretty close to $500. They were above 500 before the sell-off. 509 and changes where they started, currently sitting at about 450 or so. So that's the way I'm looking at the metals here. Copper, I don't think was really doing anything of great consequence here. Sideways pattern. We'll see how that plays out. We did have some earnings after hours. There's our old friend Google up. Well, it looks like, what is it? About 2.5, maybe 3% or so. So not really a whole lot to talk about. I had closed out this position on Google earlier in the day on this trade idea here, there, and had taken profit on it earlier. There was the open there on December 23. Was the open even earlier? December 23. Yes. And then the first bit of profit taking was on the 26th. Sorry, on the 8th of January at 27%. And then we had another set on Feb 2nd at 62%, and then the final close here. I was thinking about sitting through earnings. It's like, nah, that's not, it's gambling. It's not really well thought out trading or investing. So this one, the final portion was 39.7%. So the year has been off to a really good start since November 12th. I think it's 1, 2, 3, 6, 10, 12. I'm going to say about 15 to 16 winning trades. Amazon might be a fly in the ointment tomorrow, depending on how this plays out or how we do before earnings tomorrow. I don't want to sit through Amazon earnings as I'm seeing a similar kind of uh, options, similar bit of options activity that I saw for Microsoft prior to its earnings. It could go completely different. It could just explode higher. I don't want to pay to find out. So I'll likely close out this position tomorrow. Right now, I think it's trading at about 1450 or so. So let's see if this can close around 240 tomorrow with the implied vol. I wouldn't say a spike, it's a leap implied vol lift. We might be able to get back to break even and live to fight another day. Let's see. Tomorrow I'll make a decision on this and of course post it in the team's channel. Did we have anything else that was moving after hours? It's I will talk about Bitcoin. I know we did talk about that in the market chat. There's good old Copper Giant that we were talking about with Richard. Lilly having a good day, and that was on, looks like an earnings beat. Estimate 690, reported 750. It doesn't always mean that if you beat the estimate on EPS that the stock's going to go up. And I think AMD was a perfect example where they did beat the EPS number, but the stock uh, did not do well. 131 was the estimate, 153 was the reported estimate, 9.5 billion reported, 10.25 billion in revenue, stock down only 17%. But this thing had also run up so much and so quickly. There's that big gap there. Do we fill this gap on the way down now that the overall market is starting to look a little bit weak? I'm keeping an eye on this. So let's see if this continues the downward drift here. Now, Bitcoin and Ethereum. This is the experts, uh, and I don't consider myself one in Bitcoin, but a lot of the experts were saying we're looking at 77, 78,000 for where we can find support. We did temporarily. And now we're looking like we might test 70,000. And somebody from Zacks Research, I think, was saying that we may get down to as low as 40,000. And as Heron was mentioning today, this is not unprecedented for Bitcoin. I think we've had 50% drawdowns or more than 50% drawdowns many, many times over the last 12 to 14 years that this thing has really been trading heavily. If I put on a monthly chart, we can even look at some of those. So they're from this high here, and I'll use the kind of the drawing tool from this high to where we are now, 37% from this high to this low here, 30%. And I think this one certainly would be more significant, 80%. So let's draw that in properly so we don't. So the high here to the absolute low there, a 75% drawdown. So from 60,000, about 60,000, or it looks like it's even higher, maybe 68 or so, down to 16,000. So when you consider the the prior moves, this actually is not even that bad. As I mentioned, this is only, what is it, about 35 to 40%, depending on where you draw your marker. So am I a buyer here of Bitcoin? Not just yet. I think Heron's strategy is different than mine. He is looking to his time horizon is a lot longer than mine. I am in ETC, and that's part of the retirement account, and it has not been doing well. And at this point, when I see something interesting enough to give me a buy signal, I think I would consider adding to it. ETC has a mix of Bitcoin, Ethereum, I think Solana and XRP they've recently added as well. So if it's basically a bet on cryptocurrency and the main cryptocurrencies, and I like trading it through an ETF rather than buying individual coins. So that's what I'm looking at from that perspective. I spoke with Richard after our and Melanie after our market chat today, and they were both looking at retail. And retail, I think Sandy had brought up Walmart on Friday, and boy, has it done well since that Friday. We're go to a daily chart here. Where was the Friday close? There. So I think Richard got in here on the Friday close, and it's been a great trade in the last couple of days. I was also looking at Target, which has a very similar pattern to Walmart, and one that we don't really talk about a whole lot, which is Under Armour. They've got earnings coming up on the 6th of Feb in the morning. So let's see how that plays out. This has a lot of ground to make up, but I think the founder has recently come back or is planning on coming back as CEO, Kevin Plank, going to be taking the helm again of the ship. So let's see if that can cause or that can help with a turnaround. But this is one that I'm keeping my eye on. On Sunday, I had mentioned FITB, and there were a lot of things I liked about FITB, and it's been a wonderful, wonderful trade since that Friday close. This was the finalization of their merger with Comerica. And on Monday, I posted the trade idea around this point, 50, and I think it was 50.90 or so. And a good first day, a good second day, and a good third day. So this one, I didn't expect this. So this was certainly a gift from the trading gods that we're going to accept. And the options here on FITB, there's the first one. It was the May 55 call bought for 115. This happened, I think, within 2 hours that it moved up to 140 very quickly. Then the next one happened today, moving from 115 to 285. So 147%. Again, there's a gift there. And moving that then to the 60 calls for May. We're at 55, 54.09 right now, was a little higher in the day before, a bit of a sell-off. XOM, this one feels like a bit of a miss for me. The entry for me was right here at 123. So I'll go back and look to see what I could have done differently. Oil, I think, just was not something that is top of mind for me right now, which may be a signal that I should start considering it because when these assets get out of favor, I don't want to be buying down here or here. I think I may be able to make a case for looking at some of the major oil names here. So I'll look at that and let you know if I'm interested in doing anything there. And Sandy had mentioned a couple of the chemical companies. He had mentioned Dow, which looks terrific, Huntsman, excuse me, which looks very, very similar. And you can see we've had these buy signals that have come recently. And my conservative way to trade this is I want to see a break of a previous pivot high above the ribbon, which you've got to go way back. When that doesn't happen on the initial buy, what I will do is I will wait for a break of a new pivot high. So there's bar one, two, three. And what I would do in this case is that I would draw a line. And I'll place it for you here. So there goes my line. Straighten it out. So there is the level that I then need to break. And I break it here, but I have a close here. So this one looks interesting. Then I assess my distance to my stop loss level, which in this case is the higher of the ATR or the ribbon. So in this case, we go from 1204 to 1060, which is about $1.44. It's a little higher than I would like for that 10% range. So I sit this trade out. I wait for it to come back. And then when I get this decisive move here, I look at 1147 down to 1068, which is $1.14. So 11, what's the actual close here? 1148. So it's $1.14, which would take me down to 1034, and this is at 1062. This is my trade here. In hindsight, of course, it works well, but I'm giving you my thought process on what I'm looking at post entry signal. There are times where the first entry signal is the one that I'm entering on. And in this case, you can see very, very similar look to Huntsman. I draw the previous pivot high is too far back for us to have any serious conversations about it. So I draw that new pivot high. There's a move above, close below, watchful waiting. And when I get to within, and of course, earnings coming up as well. So earnings happen here in the morning. We get this test. There's that test at the ATR. We close with conviction above. Now, close here, 27.16, ATR sitting at 25.82. So from 27.16, it's $2.71. So we would be within our range for an entry here. And of course, the next day go up a little bit and we just take right off. So now my stop loss on this trade would have moved up to about 29 and change, 29, we'll call it 29 even. So that's the way I'm looking at these trades that are now turning around. Oil looks like it may give us some opportunities, or some of the oil names may give us some opportunities. And that's the sector that I'm looking at right now. Okay, this was much longer than I'd expected it to be, considering that we discussed a lot of this in the market chat today. I hope you're finding it useful. We are back with our next market chat on Friday at 1 p.m. Eastern. We hope you can join us then. Vince will be back with an update tomorrow. In the meantime, we always wish you profitable trading, the very best of health. We'll see you then.